Hi, this is Lara at Elliott Wave Stock Market with your weekly analysis for US oil, done after New York close on Tuesday the 13th of August. I'm recording this now Wednesday the 14th, nearly 1 AM in the morning New York time. At the daily chart level, the wave count remains the same. I'm changing it a bit at the hourly chart level though. I'm still seeing oil in a third wave down at primary degree. Within a cycle degree C wave down, within primary wave 3, we have the ends of intermediate 1 and intermediate wave 2 is over up here at 108.92, and we have this nice evening doji star candlestick pattern indicating a trend change at this point here. We have an impulsive structure downwards here, a corrective structure upwards here, and this structure, an analysis of this I've done today, looks most likely to be another correction, so I expect that we have a second wave correction either at minuet or minute degree. I may move the degree of labelling here up one in the next couple of weeks or so. I expect it's incomplete. We may see a little bit more upwards movement yet, and then we should see some downwards movement towards the mid to long term target at 55.09, where intermediate wave 3 would reach 1.618, the length of intermediate wave 1, that target several weeks if not months away still at this stage. When we have a full daily candlestick below this parallel channel on the daily chart, which is drawn around the zigzag of intermediate wave 2, we shall have trend channel confirmation that the second wave correction is over and the third wave impulse downwards should then be underway. At that stage, with a full daily candlestick below this trend line and not touching it, you may have more confidence in this wave count, and I'll have more confidence in my target. Let's have a look at the hourly structure. I've done it on a 2-hour chart today to show a bit more structure, where the low of minuet 1 down here is this point down here. So last week I had A, B and a really long C wave, which just didn't really look right. The problem is in all this overlapping here, I think we have an expanding triangle probably unfolding in a B wave position here. And so this may be an ABC zigzag, the first in the double with a very brief little 3 in the opposite direction labelled X, and the second zigzag in the double, and the two zigzags are reasonably equal in length. So now, instead of the short A and the long C, we have the problem of an extremely small X wave, perhaps less of a problem, but this upwards movement, no matter what structure we label it as, is corrective and it's over. From this high to this low, I've tried to see if this structure can unfold as a 5-wave impulse, and it just doesn't work. There's too much overlapping in the middle, and I've looked at an extended first or third or fifth wave. None of those options fit. So I think this structure is most likely a zigzag. So either we have a big flat correction unfolding for a second wave, or the second wave was over here as a double zigzag, and we have a leading diagonal unfolding in a first wave position. For both of those options, we may expect a little bit more upwards movement or not, but overall we should see downwards movement for the next week with new lows below this point for oil, for both of those possibilities. What I think is most likely is we probably have a big flat correction. Either it would be a regular flat or maybe a running flat, with a 3 for A, a 3 for B, and we need a 5 up to complete for C. It'll be most likely to reach at least a little beyond the end of A at 108.76 to avoid a truncation and a rear running flat. If it doesn't do that, it would technically be a running flat, but price can't move above 108.92 for this wave count to remain valid. When the second wave is complete, either it was over here or it's still completing, when that's done, I'll be expecting downwards movement for oil with an increase in momentum. And when we see price move below 104.35, that's this high here, at that stage we know that downwards movement can't be a fourth wave correction within this upwards movement, and so this upwards movement would have to be over. And I wouldn't want to place the high of microwave 1 any lower. From this low to this high is the first impulse in this upwards movement. So when you see movement below 104.35, expect price to keep going lower with an increase in momentum to make new lows below this point. And when I know where the second wave has ended, I can calculate a target for the downwards movement for the third wave for you, but I can't do that this week. That's all for me today with your oil analysis, and I hope that everybody had a fabulous week. Oh, just before I go, I have a poll up on my site. If you click through to the site, I'm gauging the level of interest for daily Elliott wave analysis of gold. So if you're interested in that, please go to the site and answer 2 or 3 very quick questions.